Okay, so you want to get a real handle on what's shaking up the Bitcoin market right now, but, without getting totally lost in all the data.
Yeah, feeling overwhelmed is easy with this stuff.
Exactly. So consider this your cheat code. We're diving straight into some really fascinating activity, all based on news about a huge spike in Bitcoin futures open interest, right as the price dipped below $111,000.
Precisely. And our mission here is really to unpack what that actually means. This record open interest. Why should you care? What could it signal for Bitcoin's price?
So like a direct route to understanding the forces at play. Yeah.
Yeah.
Avoiding the noise.
That's the idea. Get straight to the heart of what's moving the market.
All right, let's do it. So this headline item, record Bitcoin futures open interest, OI as they call it.
Yep, OI.
In simple terms, what is it actually telling us?
Okay, think of it like a big public tally. It counts all the active, unsettled bets on Bitcoin's future price.
Bets, like contracts.
Exactly, futures contracts.
Yeah.
So OI shows the total number of those contracts still open. It gives you a snapshot of market speculation at that moment.
And the size of this tally is, well, is pretty massive, right?
Oh, absolutely massive. CoinGlass reported it hitting just over $80 billion on May 23rd.
80 billion.
Yeah, I mean, that's bigger than the market cap of some pretty well-known companies. It just shows the sheer scale of betting happening.
And it happened fast too, right?
That's the other striking thing, a 30% jump just since the beginning of May.
Wow, 30% in, a few weeks? So when OI surges like that, what's the underlying signal? What are traders actually doing?
It's a very strong indicator of leverage. A huge number of traders aren't just using their own capital, they're borrowing money.
Borrowing to make bigger bets.
Exactly. Amplifying their potential gains, but also their potential losses. It's a high-stakes game.
Okay, right. Amplified risk.
Yeah.
That sounds like where things could get choppy. Let's talk about that downside. Leverage and dominoes.
Yeah, this is where it gets really interesting, potentially risky. When the market is saturated with these highly leveraged positions, even a relatively small price move against those bets can trigger, well, a cascade of liquidations.
Liquidations, like forced selling.
Pretty much. Think of it like a margin call in stocks, but often faster in crypto. If the price drops below a certain point for a long position, the exchange automatically closes the trader's position to cover the losses.
Ouch. And when lots of those happen at once.
That's the cascade. It creates intense selling pressure. Suddenly you have a flood of sell orders hitting the market, which can push the price down even further very quickly.
Okay. So that explains some of those sharp, sudden drops we sometimes see. The volatility.
It's a major factor, yes. Understanding that helps make sense of those sometimes hair-raising price swings.
Right. So we've got this potential, pressure cooker in the futures market. But the reports also mention something working the other way. Spot Bitcoin ETFs seeing big inflows.
Yes, and that's a really crucial counterpoint here. We've seen a lot of capital moving into these spot Bitcoin ETFs.
How much are we talking?
Reports mentioned over $2.5 billion flowed into them just in the past week alone.
$2.5 billion in a week.
Yeah. And interestingly, this comes alongside more talk about institutions getting more involved, maybe suggesting a shift in who's holding Bitcoin.
Okay. Quick clarification for maybe some listeners. Spot ETF versus futures ETF. Why are these spot inflows such a big deal?
Good question. So a spot ETF actually buys and holds real Bitcoin.
Okay.
A futures ETF, on the other hand, deals in those futures, contracts the bets we were talking about.
Got it.
So these big inflows into spot ETFs mean actual Bitcoin is being bought off the market. Real demand.
So it's not just paper shuffling. It's real buying pressure.
Exactly. And that real demand can potentially absorb some of the selling pressure if those futures liquidations start happening. It's like a counterbalance.
So real buying on one side, lots of leverage bets on the other. Kind of a tug of war.
You could definitely see it that way. You have this substantial spot buying, but that high futures OI is still, hanging over the market, a potential risk factor.
Interesting tension. Now, the article also mentioned the Bitcoin options market. Is that showing similar signs of heightened activity?
It really is, yeah. The options market is also buzzing, kind of mirroring what we see in futures.
How so?
Well, look at the open interest on the Deribit exchange, which is a major platform for crypto options. There's huge OI concentrated at specific price levels or strike prices.
Like where?
We're talking over $1.5 billion in OI at both the $110,000 and $120,000 strike prices.
Whoa.
and then over $1 billion each at 115K, 125K, and 130K. So it reinforces that picture of traders positioning for potentially big moves similar to the futures market.
So options traders are also placing some pretty significant bets on where the price might go. And this all leads up to an options expiry event, right?
That's right. A big one. Around $2.76 billion in notional value of Bitcoin options contracts were set to expire on May 23rd.
2.76 billion.
Yeah. Oh.
Okay. And there's something about a put-call ratio.
Yeah, the ratio was 1.2%. Now, simply put, that suggests slightly more people were selling put options compared to those buying call options.
Puts and calls. Remind us quickly.
Sure. A put option generally gives the buyer the right to sell at a set price, often a bet the price will fall. A call option gives the right to buy, often a bet the price will rise. Selling puts can be a bet the price won't fall significantly.
Okay, got it. And connected to expiry is this idea of max pain. Sounds ominous. What's that?
Yeah, that sounds dramatic. Max pain is the calculated price point where the largest number of options contracts, both puts and calls, would expire worthless.
Meaning the most traders lose money.
Essentially, yes. It causes the maximum financial pain for option holders collectively. For this specific expiry, the max pain point was calculated around $103,000.
And does the price actually go there?
Sometimes. Historically, the price can sometimes gravitate towards the max pain level as expiry approaches. There's speculation that large players might nudge the market that way to maximize outcomes for the most options. Kind of like finding the outcome in a betting pool where the fewest people win big.
Huh. Fascinating. So we have all this action in futures and options, and the price did wobble a bit. You mentioned it dipped.
It did, yeah. TradingView data showed Bitcoin briefly slipped below $111,000 on Coinbase.
Which kind of highlights the point about leverage and volatility.
Exactly. It shows how that built-up leverage can translate into those quick downward price movements, even if they're short-lived.
But we need context, right? That dip happened after a pretty strong run-up.
Absolutely critical context. Despite that little slip, Bitcoin was still up almost 20% since the start of the year.
And even more since that April low.
Way more. Almost 50% up since it dropped to around $75,000 back in early April. And it actually hit a new all-time high, $112,000 just the day before, May 22nd.
Right, so these short-term wobbles, influenced by leverage, are happening within a bigger upward trend, at least recently.
Precisely. You have to see both the microvolatility and the macro trend.
Okay, so let's wrap this up. If you had to boil it down, what are the key things our listeners should take away from this deep dive?
I'd say number one, that record futures open interest means there's a lot of borrowed money betting on Bitcoin's price. High leverage.
Which means high risk of volatility from liquidations.
Correct. That's the big risk factor. But number two, you have those very strong inflows into spot Bitcoin ETFs.
Representing real demand.
Exactly. A potentially powerful stabilizing force pushing back against that liquidation risk. And third, don't forget the options market adding another layer, especially around expiry dates and points like max pain.
So it's a complex picture, but hopefully you now have a much clearer grasp of these key forces, the leverage risk, the ETF support, without needing a PhD in crypto finance.
Right. And it leaves you with a really interesting question to think about. You've got record leverage clashing with record ETF inflows.
What do you think is the most likely path for Bitcoin in the short term? And maybe more importantly, what signs or indicators would you watch to see if your view is playing out?
That's a great takeaway thought. Because understanding these dynamics, these undercurrents, is just crucial, whether you're deep in the crypto world or just trying to follow along.
Couldn't agree more.
Well, thanks for walking us through that complex picture, and thanks to you for joining us on this deep dive.